In the world of investing, there's this saying that goes, the best time to start investing was yesterday, and the second best time is today. And while it might sound a little bit cliche, it does hold profound truth, that investing definitely has the power to transform your financial future. And in today's video, we're going to go through how buying into one simple, low-stress, high-quality dividend growth ETF can not only make a significant difference in your life moving forward, but also future generations for your families. Now stick around because we have a lot to go through. Right after you, please drop a like on this video and subscribe for more future content like this. So first, let's back up and go over all the basics. What even is an ETF? Because before we dive into the transformative power of this high-quality dividend growth ETF, let's briefly explain what an ETF even is and how they work. So an ETF is an exchange-traded product with shares that trade on the stock market. Now ETFs are designed to provide investors with some diversification, exposure to particular asset classes, industries, or even in the case of this video, an entire market index. Now ETFs offer cost-effective and convenient ways to invest in a broad range of different assets. Now one of the key words that we talked about a second ago was the word diversification. And diversification can definitely be key, especially for long-term investors. And one of the most remarkable aspects of ETFs is their ability to provide instant diversification. When you invest into a single ETF, you gain exposure to a basket of underlying assets, which can include various stocks, bonds, and commodities. And we're going to go over exactly which stocks are within the ETF that we're talking about for this video in a second here. Now with diversification, it can reduce risk for the investor associated with investing in just individual stocks or bonds. Because with a diversified ETF, you get exposure to many different stocks. So now that we're all up to speed on what an ETF is and how important diversification is, let's talk about the most important aspect of this entire thing. Now long ago, Albert Einstein famously said, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Now compound interest occurs when the returns generated from the initial investment are then reinvested, leading to exponential growth over time. And the dividend growth ETF that we're going to be going over later in this video can definitely harness all the power of this. Because as your ETF investment grows, the dividends that it generates can be reinvested automatically, helping the investment grow even faster. Now the ETF that we're going to be talking about in this video that has the power to not only change the future for you, but also your family's financial success is none other than the Schwab US Dividend Equity ETF known as SCHD. Now SCHD is an ETF that has a pretty simple objective. It's to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. So this ETF tracks an entire index, made up of around 100 or so different stocks. Now some of the good things about this ETF is that it's straightforward, it's low cost, it's simple, but yet it has the potential to build massive wealth, and it's done so historically. Looking a little bit deeper into the Schwab US Dividend Equity ETF's performance on multiple different time frames, this ETF is up around 184% just over the last 12 or so years, and this is without dividends included. Now, one of the great things about this ETF is the fact that it is so diversified. The holding breakdowns are as follow. Industrials are around 18%, healthcare around 16%, financials around 15%, technology around 13%, consumer defensive around 13%, energies around 10%, consumer cyclicals around 10%, communications around 4%, basic materials around 2%, and then a small bit of utilities and cash. Now, what's great about buying into an ETF like this and holding on to it long term, with it being so diversified, even if a few of these sectors don't perform all that well, let's say over a 5-year time frame or a 10-year time frame, you're going to have so much exposure into different industries that even with some bad performers, the good should outweigh it. Now the top 10 holdings for this ETF as of right now are things like Cisco, Broadcom, Amgen, the Home Depot, AbbVie, Chevron, Merck, Texas Instrument, Coca-Cola, and Pepsi. And like we said earlier, there's around 100 different stocks within this ETF. So once again, even if a few stocks don't perform all that well, the rest of the stocks should pick up the slack. Now, like we touched on earlier, one of the most important things for a massive wealth generation long term for you and your family is going to be the power of compound interest. And with an ETF like SCHD, which has a 3.54% trailing 12-month dividend yield, investors buying into something like this will be able to reinvest their dividends and buy more shares at an overall pretty quick rate. Another very important aspect of this ETF is the fact that it has a very fast dividend growth rate. Now, dividend growth rate is basically how much is paid out in dividends compared to the last 12 months. Now, SCHD has a trailing 12-month dividend growth rate of around 7.13%. So however much you were getting paid last year, let's say, now you're getting paid 7.13% more. And over the last 3, 5, and 10 years on average, SCHD has had between around 11 and 14% dividend growth rate, which means, as you can see right here, every single dividend that's been paid quarterly, over time for the most part, has been going up and to the right. Investors that bought into this ETF around 10 years ago were getting paid around a quarter per share per quarter. Now that same investor is getting paid around 65 or 70 cents per quarter, which is almost 3 times as much. But now it's time to get to the good part, showing you exactly the math and exactly how pretty much any everyday investor can build out and grow a portfolio long term that can take care of not only them but their family in the future. So if we were to plug in stats for SCHD specifically on the dividend calculator and start with a $10,000 starting principal, $12,000 contribution per year, a quarterly distribution payout, which is how often SCHD pays a dividend, drip turned on, which means all the dividends are going to be reinvested to create that compounding effect. Then a 3.5% initial starting dividend yield, 8% annual dividend amount increase, 3% annual share price appreciation, and 30 years invested. Let's see what we get. So your number one, this investment would be $10,000 with around $354 per year in dividends. Your number two, after the contribution and after the dividends reinvested, this investor would have around $22,600 worth of principal and around $840 per year in dividends. By your number three, $36,000 and $1,400 per year in dividends. Now your number four, $50,000 and $2,000 in dividends. By year number five already, this investor would have over $65,000 invested and over $2,800 per year in dividends. Now what's crazy about this is as time goes on, what you're going to see is that the numbers just get bigger and bigger, and this is because the dividends are being reinvested and buying more shares of SCHD, which pay more in dividends, and not to mention SCHD historically has paid more and more in dividends every single year. So that's exactly the magic of this entire thing. By year number 10, this investor would have $161,000 invested and almost $9,000 per year in dividends, $212,000 and $12,700 in dividends. Now by year number 15, $309,000 and $21,000 per year in dividends. So even though it might seem like things started off pretty slow, as we go lower and lower, you're going to see the numbers pick up even quicker and quicker. By year number 20, this investor, in theory, just by going off of all of our numbers, would have around $561,000 invested and almost $50,000 per year in dividends. By year number 25, over $1 million and almost $118,000 in dividends. And lastly, by number 20, this investor, in theory, would have over $2 million invested and almost $300,000 per year in dividends. Now keep in mind, this is just off of $10,000 starting and $12,000 per year. So if you're able to contribute more, it would change. Maybe you can't contribute as much, it might be a little bit less, but this gives you an idea of what pretty much an everyday investor could imagine if they were to invest in something with the same exact or similar performance of that of SCHD. Now, what's better than taking care of yourself financially? Of course, taking care of your loved ones, your family. So looking at what things will look like later on in the future, past 30 years, on to year number 31, we're at $2.37 million with $364,000 in dividends. Now, the reason the numbers are going to get so much bigger, so much faster here is because at this point, you've been investing for so long that the power of compounding is really, really kicking in. By year number 40, let's say at this point you've passed this portfolio on to maybe your kids or something, $11 million invested, $2.8 million per year in dividends. Now, this is exactly how generational wealth is created. And by year number 45, $36 million and $11.5 million in dividends. So what I really want to prove here is that you can see with your very eyes and going off of the math that a relatively small amount invested over a very long time frame, as long as the dividends are reinvested and as long as the investment vehicle keeps paying more and more in the future, which like we saw SCHD at least has historically, a relatively small initial investment could not only set up you financially in the future, but also if an investor stays invested long enough, they have the chance to create massive generational wealth. Now I want you guys to comment down below. If you could only hold on to one individual ETF from now until you retire, which ETF would it be and why? If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.